Eric Muathe, Muathe.com. Let's take a look at the daily chart here for Amazon, and we can see as of the close of yesterday, which was July 27th, we see that there was type of a rejection when the stock was trying to move above 69.1. So we gapped up but ended up closing the day lower. All right, and also this rejection when trying to move above 69.1 was concerning, but I want to show you one line that I think was coming in play, and it is this line here. So we broke down here during this drop, and since then that line has become a little bit of a problem for the stock. And you can see we even did not get back to that line here of those highs. And here we can see that this is uniform action rejection when trying to move above that line. In fact, if I was to draw it a little bit different, you'll see that it is actually coming and making exact rejection. So if I draw it like that, you can see that this is good indication that the stock was coming back to backtest that line. And as of right now, it is stalling. In fact, in a couple of minutes here when the market opens, I'm going to show you what the chart looks like. You'll see the stock is responding to that level by pulling back. Now, one key here is whether or not the stock is going to stay down with today's gap down is going to be dependent, in my opinion, on how the RSI responds on the monthly. If the RSI can hold above 69.1, then this is going to be a shallow pullback. So now that the market is open, let's go back to that daily chart and see what we got. And we can see the market has opened here. We are seeing a gap down of about 4%. And also this is consistent with a big drop because now we see the RSI moving below 50. Check the description of the video for a link that describes why we see a big move when stocks are moving below RSI 50. I also forgot to mention we see an improvement here in prices. Take a look at the technicals. Now we can see that this is confirmed negative divergence. If we take a look at the weekly, we can see here that the stock is now showing rejection when trying to move above 69.1. That rejection is uniform. In other words, it is symmetrical action. So that could also be a sell signal based on the fact that that is well constructed uniform action rejection. But I can also see here that the key as to whether this is going to be a true meaningful sell-off that is going to bring lower prices, I think one of the determining factors is whether or not we can hold above the prior weekly closing high. So the level to watch here is 1006.73. Now this was the prior weekly closing high. The stock was doing its best to break out, so it needs to hold above that level if it is going to be successful. In other words, if it stays below 106.73, then this becomes a confirmed failed weekly breakout. And we know that failed breakouts are notorious for taking stocks lower. So I would use that price of 106.73 as a threshold. Anything above that is bullish, while anything below 106 is gonna be bearish. Let's take a look at the monthly chart, see what it looks like. The monthly continues to hold above 69.1. That still shows that the stock has some remnant of strength. As long as the monthly is above 69.1, expect pullbacks to be shallow. Also, we can use the recent monthly closing high as a level to watch to see whether it is successfully breaking out or failing. And the level to watch on the monthly is 994.62. Failure to hold above that price would also be a red flag. That's something also to watch. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. ESC.